Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. On today's show, what do we have here? We have Bed Bath & Beyond earnings. We have Apple shrugging off that downgrade yesterday. We have Tesla freezing their expansion of their Gigafactory with Panasonic. We have Caesars up for sale potentially, and a few other things, but those are at the top of my list this morning. Our guest today, Ryan Detrick. He's a CMT, also a senior market strategist at LPL Financial. He would join us at 8:35. In the meantime, Joel, what is happening in the overnight session? We have I thought I read we had a agreement on the trade war. I guess
agreement on, agreement off. Substantial progress in trade talks is what trade optimism extraordinaire, but who cares about that? All we care about is getting through 2,900 in the S&P futures. This is going to be the fourth day in a row we tried to get through that area. That is the pre-market high. We probably have some nice, juicy buy stops above that level too. So that's the target on the upside. Above that, things really open up to your October 9th high at 2909.50. On the downside, we got down to 90 even, or 28.90, and that's just above your daily pivot. The super extra major support is down to Tuesdays and Wednesdays lows. That's 77.25 and 78 even. Crude in the red by 57 cents, double top, 64.70, 64.76, peeling back, but crude's been resilient as of late. Gold down $10 here, 1303.80, still trading in a range. Silver hanging on to $15, down a little over 2 cents at 15.04, and Bitcoin, old resistance, new support, down $377 at 504.0. Will 5,000 hold? So let's bring in our after hours trader. Did you get down and dirty in triple BY?
No, I did not.
No.
Should I have? Maybe. Holy cow. What trading action in Bed Bath & Beyond. That was crazy movement. Came out with the numbers. Spikes, ridiculous spike to over $21. What? Comes all the way back down. The scratch keeps falling. Below 19, below 18. Now it looks like it's challenging 17. You're talking about a stock that just fell from over $21 after hours down the low 17s. Incredible reversal, down 11%. Not looking pretty here for Bed Bath & Beyond longs.
All right, a lot of numbers here. The headlines are that the earnings, the Q4 results were good. The fiscal year 19 guidance was good, but the adjusted EPS guidance actually was weak for that for fiscal year 20. But anyway, earnings Q4 $1.20 versus $1.11, so that's a beat. Sales 3.31 versus 3.33 billion, so I guess a slight miss on that sales number. They also raised their dividend from 16 cents to 17 cents per share. They gave guidance, like I mentioned, for the fiscal year. The EPS guidance there was higher than estimates at. They gave a range of $2.11 to $2.20 versus a $1.99 estimate. So the numbers are mostly good. The dividend raised by a penny is fine, but I don't know.
No idea how to trade this. I mean, when you get kind of movement like that, this is above my pay grade trading these things. Like when they just, to rip in and then it comes all the way back down. I mean, as you look at it now, you think, okay, well, you had all these lows in the 16.5, 1680 area, where obviously, you had the activists come in and then, consolidation station for about a week and a half. You're back at that price of consolidation station. So maybe you find support where you did before, but the thing was so wild. So many people, anybody bought that last night is just destroyed. And hopefully it wasn't any of our traders. Now you look at it down here, but the shorts who maybe got spooked by last night's spike, I think would be bringing some in here, and it does have a high short interest. So I don't know. I mean, if you're just looking at technical support, you got some support in the higher 16s.
Yeah, in the mid 16s too. I see a bunch of lows from 1665 to 1689. I see the low since you've had that report at 1633. So I better, let's see what happens. We get under 17. I think you just have to be cautious on the short side, because if the big buyers do come in, you're going to get a rally. But I just see what happens in the under $17. Now, if it doesn't get under there, then the shorts will have to be scrambling on strength here. Wouldn't look for a real big breakdown until you get into that gap area, and you got to breach 1633 in order for that to happen.
Yeah, and then you get into, then it gets slippery if you start to get down below 1633. I don't know if I see us too. I think you're gonna have some shorts that are gonna support it maybe here today. But again, this is going to be a really hard one to predict. And if you're trading it, it's probably still going to be pretty wild. The only thing is it's come down and it's traded so much volume that I don't think this is like going right back up to $18, $19 in a hurry. Maybe it's already kind of pricing, because if you look at the after hours trading action, the pre-market trading action, it's been down in the 17 handle for a long time now. So bring up that chart, Spencer. Show us the pre-market action, because you had the wicked spike, the sell-off. But really, if you look at it, and obviously early in the morning, 4 a.m., 5 a.m., there's not many people trading it, but it's already traded 366,000 shares here this morning in the 17 handle. So it kind of looks like it wants to be in the 17s. Obviously, the 21 spike, which you just see that small little line, it wasn't up there long. It went straight up and straight back down before they decided they didn't like the report. You've still got the activists probably in there, so that's a wild card for the stock, but definitely some issues here when the stock comes off that much from those highs.
All right, so we'll see. I don't know if it's going to have effect on many other retailers, because there's just such a story, surrounding this one.
I mean, Williams-Sonoma, you always used to think like, and I don't know how much effect it has on it anymore, but you look at WSM, it's performed pretty well. I mean, could it put a little bit of heat on some of the retailers? Maybe, but there's not that many pure plays like Bed Bath & Beyond. Like there's not, I can't think of like a stock that's like, okay, this is a straight sympathy play here. We could go to Spencer and see what the Benzinga site says there on sympathy plays.
Nothing
but
good.
The only thing popped in my head is
too tough.
Yeah. Nothing good. Like you said, I don't know if there are any pure sympathy plays to go with Bed Bath & Beyond. It's just too unique a story.
We don't have any stores that you go in and you can't get out.
It's the maze of towels.
Yeah, well, yeah, we do.
They sell 10 million towels in that store. I'll tell you what, it goes up to the ceiling, the towels. So many towels.
I would say the biggest sympathy play is probably IKEA, which we can trade. But also
IKEA sells everything.
Oh, that's a harder store.
Also,
you ever been in IKEA, Dennis?
No, you can't get out of IKEA.
Oh, you're trapped.
They intentionally don't let you out. They let you in, but they don't let you out. You got to follow the little arrows, and you start going. You're like, well, how long can it take? 2 hours later, you're still trying to escape the store. They're huge stores.
They should put the meatball.
You know what I do like at IKEA is that cafeteria. You can get like $1 or $2 like meals and stuff. It's dirt cheap, the cafeteria. So I do like the food, and that's obviously not great food, but I like it because it's so cheap.
Yeah, Dennis loves IKEA for their food value. Anyway,
the value gets better than McDonald's.
Okay.
There's some stuff in there for like $1. Like you get like breakfast in there. It'd be like breakfast for $1. Here, we'll give you toast, eggs, $1. Just come on in. But they can't escape the store is a problem.
All right.
So the cafeteria they put in the middle of the store too. So you're euchred. You're stuck. That's a loss leader right there. We'll get you in the store. Come in for the 99-cent scrambled eggs.
Stay for the overpriced rugs. What about Apple here this morning? We talked about them yesterday. They got that downgrade, and I guess it didn't matter.
Yeah, I thought there might be some fall through for this. I was wrong. They bought the thing immediately there, and they bought a lot of stocks on the dip yesterday, and Apple has been strong, so they used that opportunity to bring it right back. It opened near the lows and rallied straight back up. So showing good relative strength here, up again here this morning. Nothing can derail Apple, Joel. This is incredible. Still long into my long-term portfolio.
Yeah, nice move, trading up 29 cents. 200 held it a little bit as a psychological level. 202.85. That's what we'll be keeping an eye on. That's the high of the move. That's only a couple bucks away. And you posted a new high for the move yesterday at 200.62. Still trading above 200. We filled the gap at Apple that we talked about a while ago. And then after that, let me see if I can find the next daily high above 202.85. Boy, I got to go back a ways here. Holy mackerel. 206.01 on the dailies, and that's just the dailies. That would be your next daily high. That was from November 9th.
Jump over back to the earnings just quickly, then we'll get them done with. Fastenal, FAST, call it the nuts and bolts of the market, which is obviously a pun because that's what they sell is nuts and bolts. FAST trading up. Spencer, how'd they do?
Q1 EPS 68 cents versus a 67-cent estimate. Sales of 1.309 versus 1.31 billion. So essentially in line on both their Q1 numbers.
It's a stock. I always say this every quarter. I always wanted it in my investment portfolio, and I never buy it. So it's one of those that, and obviously got down in the lower 40s there. It was a good opportunity. In December, got back into the 40s, just under $50. It's run up ever since. It seems like the stock always, for some reason, once a year has a pretty good decline, and that pretty good decline seems to always be a buying opportunity. I mean, if you go out to the monthlies and you look at this is a stock that you can see the chop. I mean, look from 2012, you can even go back. It's really gone nowhere for about 7 years. It's been between 40 and 55. Now we're up at 65. So I guess you're breaking out here now after a 7 or 8 year consolidation. Ever get back down in those mid 50s? Probably a buy. I'm not chasing up here at 65, 66 bucks though.
Let's see, 66, trading at the high of the pre-market session, which is 66.60. The former all-time high. Well, we'll see if we get to the all-time high, 67.09. So there's your bogey. That was your high just a few days ago. And whenever I think about this stock, I think of Cousin Jimmy, because cousin Jimmy and his family has been in this since like the company started. And he's
Who's
told
Cousin Jimmy?
Cousin Jimmy?
Yeah.
Cousin Jimmy.
Tell me your Cousin Jimmy story.
No, his family's been in Fastenal. How long has the thing been around? For like ever.
Is this your
right?
Cousin Jimmy, or is this something I've never heard of?
No, it's my real cousin Jimmy.
Oh, your
it's
cousin
my real,
Jimmy.
Yeah, my real cousin Jimmy. And he's
I also was.
He's a Greenblatt. He's my dad's 6 sisters.
And he wanted you to buy Fastenal 50 years ago, and
yes,
you never bought it. You should have been in.
I know.
The nuts and bolts of the market. If construction, they fasten everything down.
Yep.
Dennis, I also wasn't sure if that was a euphemism for someone.
That's what I was wondering. You never know.
Founded in
what? Oh, if it was something I made up.
Founded in 1967.
Yep, they've been in. Since the IPO. From the IPO.
52 years ago.
Fast. Yep.
No, is that right? 42. I'm doing the math. No, 52. Yeah, 52. Holy cow, the years are flying by. Anyways, okay. Let's digress away from Fastenal here in Cousin Jimmy, and let's go talk Lyft. LYFT absolutely destroyed yesterday here. We were talking about it on the pre-market show. The prof was on fast money, and he dogged this, saying it was worth $59. I don't think anybody thought it was going to go straight to his price, but it pretty much did. It got down to $59.75. I don't know if the 59 pricing by the prof is going to be the floor on the stock or not. This is an incredible move, though, and obviously a breakdown here. I mean, it's still trying to find where it wants to be. Ugly, it traded fairly technical, actually, for a stock that hasn't traded very long, where I say it's hard to trade technicals. But, you called the high the one day, the 72, and then I said if it got near 75, that could be, looking at the high back from the first, and it got up to 75, kissed on the nose for one day, and then started to retreat from it. Took out, obviously, the lows of the move at 66.10 yesterday and never looked back, straight down 6 more points, so down another 10%. We're lifting up here this morning, no pun intended, lifting 0.75%, but this stock is still broken.
Is it going to pull Facebook, you think?
Like eventually go back up?
Yeah, like someday.
I don't know. It's a valuation. The valuation, and this is why I didn't participate. I mean, what is it still? It's still worth like $20 billion, isn't it? What's the valuation of this thing?
Yeah. Well, they raised, $2 billion on the IPO?
I mean, okay. And the professor we're talking about, who they call the Dean of Valuation. We mentioned him yesterday, but I'll just mention again. So anybody who didn't listen to the show yesterday, we're talking about Asworth Damodaran from the Stern School of Business at New York University. And he made a lot of good points. I mean, this is somebody that I actually follow on Twitter, and he makes great points when he gives arguments and he writes up, papers. He was stretching to get this valuation to 59 is what he said. And this was when it was trading up at 67. He's like, I'm pushing stretching every metric I possibly can to get that value up to 59. But what he was saying is there's no competition. I mean, the competition, there's no barriers to entry here. I mean, how do you stop, competition from coming in and eating Uber's and Lyft's lunch? Like, what stops more of these ride sharing programs from coming in? Uber's got the head start because it's the biggest, and Lyft obviously is right there with them in North America. But I mean, it is a concern, the barriers to entry, and the growth, he was already saying, is starting to slow. So, I mean, it's hard to come and pay crazy valuations for companies that are burning cash when the growth really isn't there. So, he made a lot of good arguments. Makes me scared. I want more technical data before I try to make a call on this. So I don't know if it's going to his $59 price. I don't know if it's going to take that out and go lower than that. We're going to see the Uber IPO coming soon. Obviously, that's going to impact everything as well. Lots of unknowns here. When there's this many unknowns, I don't trade it.
Could you give me the name of that guy again, please?
If I'm saying it right, and it's obviously hard to pronounce, I believe it's Aswath Damodaran. I think that's how you say it.
Okay. I asked you to spell it.
ASWATH. Damodaran is DAMODARAN. But every time he's on Fast Money every once in a while. But, if you follow him, he writes some great blogs. He actually, like I said, he's old school, crunching numbers, figuring stuff out. And, it's tough to trade markets that way. But it's always good, when they have an opinion and they come on CNBC, they're going to influence the stock. Like I said yesterday, I was focused on his LEVI, because when you started saying LEVI was worth $27, I watched it go from CNBC. I watched it go up $1 on those comments. This guy's a mover. He can move stocks. Now, I don't think he caused the Lyft fall yesterday. I think it wanted to go down, but I don't think he helped the stock either with his 59 price target. And he had that already out. But when he comes on Fast Money and says it, and it started getting hit a little bit on that, it spooks the market a little bit.
And what's his Twitter handle?
Oh.
All right. I'm just going to try and track him down. I'd like to try and get him on.
I'd love to have him on the show.
Yeah.
Yeah.
Try and check him down.
He's an excellent speaker. I'm just trying to see his Twitter handle. Speaking of
Lyft, though, bringing it back to Lyft for a second, circle all your Lyft traders May 7th on your calendars after the close. That is the date of their Q1 earnings report.
What's the date again?
May 7th after the close.
You got a month.
59.75. That was the low from yesterday. You're getting a little bump here, up 54 cents, but nothing to write home about. So we'll keep an eye on 59.75.
Jump over other movers from yesterday and a mover again here this morning. They will not stop downgrading U.S. Steel. Is this 3 downgrades in 3 days? Because X is downgraded again here this morning. It's a double downgrade here this morning, I believe, from buy to sell. Who's doing the damage this time?
Bank of America buy, screw you neutral, straight to underperform.
Or let's go straight from buy to sell. Wow. So an underperform, they call it over there. It's down another 50 cents here. It's been absolutely crushed the last 3 days since it took out. And when they take out these main levels, and we talked about on the show that day, if it takes out 1875, I said this thing could be at 17 very quickly. 2 days, it got to 17. And now it's below 17, 1675. So if you're leaning on 17, well, if you thought you were going to get a shot at it, you're not actually taking it out here this morning because it's getting the double downgrade from Bank of America. This chart is awful looking.
I don't know. I'm trying to type in the chat. I'm sorry. Fast market here. I don't know what to say. Did it take out that 1703?
Oh yeah. A double downgrade from Bank of America. It's taking it out today.
1643 is where it got to. So you got a little bounce off that. 30 cents only. Boom. 1372. That was a monthly low in June of 2016. I don't know. Just use half and whole numbers. Have no idea where
stops getting downgraded. I mean, wait till it stops going down. Like, and that's what I always. And I try not to be a hero and say, okay, it's just cheap enough. It's got to bounce. Yeah, it could bounce, but I mean, it could be $16 before it bounces. So it's always scary to just jump in these things and say, okay, well, this is the bottom. It can't go any lower than this because it can. So, I mean, we saw this happen already here. Stock looked like, 19, 20, or you're looking 3 days in a row now I mean, wait till stocks going down, because we've seen stocks go down for 7, 8, 10 days in a row, and it can be really ugly. I mean, we even have precedents in this stock. When it was at $24 and it had the ugly day, I'm going back to February 28th when it went down to 22. Well, if you're saying, okay, well, it's cheap enough, I'm going to buy it now, it goes down the next day, and 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 then it's at 19 before it finally gets a bounce. So, I mean, if you're looking at just that move, that measured move, 24 to 19, you go 20, you take, the percentage base or whatever, you're probably 15, $16.
What about your Nucor? Did you dump? You gonna dump your Nucor?
No, Nucor's best of breed. I've had Nucor in my portfolio for a decade. So you want some exposure. I mean, this is what diversification is all about, and I've got to stop. It's probably because I do the radio show that I'm trading my portfolio too much. I used to have a rule. I never, the only reason I would sell a stock is if the story changed and there was a fundamental problem with the company. Now I find myself trading my portfolio all the time. I need to stop doing that. And it's probably because I talk about my portfolio so much. I used to have my stocks in my portfolio and I never look at it. But now, full disclosure and stuff, I mention a stock, I gotta say, oh, it's in my long-term portfolio. It gets me thinking about it all the time. Need to know your long-term stuff. If you're a long-term investor, you need to find good companies and hold on to them. That's the best stocks. If I look at my long-term portfolio, my best stocks in there are stocks I didn't touch. Like the MasterCard, I did eventually sell some of that. But I mean, that's how you get stocks that you're up 1,000% in, by holding on to them, and it's got a good story, and not selling every time they bounce up 20%. If you're always selling your winners every time they're up 10, 15% and hold on to your losers, it's hard to be a good long-term investor. You've got to have those big winners. And if you're always selling, on those pops, you're never going to get those big winners. So I need to stop trading my long-term portfolio. Nucor I had in there for the diversification. It's never going to be a stock that's going to be like MasterCard and go up 1,000% for you, but it pays you a dividend. It's one of the best, if not the best, steel producer in the world. And if you think the world's going to expand and we're going to need steel, Nucor is going to be providing some of that. They're cash flow positive. I mean, they're safe. They got a nice dividend. It's a lot safer play than a U.S. steel, which is a little more wild. Now you're going to make more on a U.S. steel, but you're not going to lose as much on a Nucor. So Nucor is one I've been in there. I'm not touching. I'm leaving it in there.
All right. I was looking at Steel Dynamics and also Nucor and Schnitzer Steel. They've been holding up a lot better. This just seems to be specific to U.S. Steel here. So I'm looking at these other stocks, and they haven't caved yet. So we'll see if there's any follow through in the sector.
Jump over just if we're going to do ratings here for a second, because we just touched on the U.S. Steel. There was some other ones too. Let's go to CMG, because this one is the first downgrade for it in a long time. It's been on an incredible run. Obviously up again yesterday. They are right near the high, 719 it got up to. It is getting downgraded this morning. What's the analyst and who's doing it there, Mr. Israel?
This is Jefferies, a downgrade from buy to hold, and they announced a $700 price target.
Just valuation, basically. The stock's run too much, so they're ringing the register. Stock's down $7. It's down here today. I would have thought almost it could be down more, because this is the first downgrade in a while. It's people who just want to buy this stock too, though. So it's hard. Trend is still your friend here. It's still up. It's going to take a good, can it get down to 700 again? Yeah. And I don't know if it's going to do it today on this downgrade here, but I'd say bulls are still fully in control as long as it's above 695. Takes out 695, then it starts to get interesting from a little bit more of a bear case, because that's the low from the last 10 days. But I'd say as long as you're above 695, bulls completely in control still on CMG.
All right. Trading down just near the pre-market low. Pre-market low is 709.85. That takes you through yesterday's low, but not even 70, and your 2-day low. Oh boy, I don't know. 707.85 was your low at on the 8th, and then you dropped to 701.08. But I mean, if you've been in this for a long term and you took the heat and everything, maybe wait till it loses 700. A little psychological number instead of running off one downgrade here. Up near
give yourself some room.
Yep.
Like that's what I would say. My bogey was the 695, but give yourself some room here. I mean, when you're long these things, and if you're long for a swing trade, congratulations. This trend has just been perfect. I mean, you haven't taken a lot of heat. So if you bought this thing back at the beginning of the year, like $450, gapped up on like the second or third day, and it was up, and we had some minor pullbacks here from 543 down to 5 519. So that's a 30-point pullback, but then you had the gap and go again. And you know what? Give yourself some room. I'd say below 695, though, I'd be nervous if I was long. That's what my bogey would be.
Just for in the chat, someone, AJ Torres, asking about Levi Strauss. And boy, that thing was sold yesterday off that good report. I don't think that's a great sign.
No.
Closed near the low, trading below the low. See what happens at 22. If it gets down to 2202, that was the gap fill. And then you had 3-4 other highs right at that area. So let's see if it gets down there. I'd wait to try and cover a short in that area.
I completely agree. You don't want to see stocks that get the big rip, and especially they rip in the morning. You know, everybody's rah, 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 and the media's talking about it, and you get more basically suckers buying it at that point in time because they're buying the gap and they think, oh, it's 23.5. It's going straight to the Prof's target of 27, and you know they pull the rug out from under it, and then it sells back off. They try to get a little lift right before lunch, and then just start leaking again. So it's telling me as it's leaking, there's more sellers. I would not be surprised if this closed the gap. I don't know if it's going to do it today, but I think we're going to see this thing at $22 again. So, and I don't know. Yeah, sure. You know, it's, you know, got some cash flows. Yeah, but it's still blue jeans. I mean, how much growth is there? That's my question.
There's blue jean shorts.
I remember watching the daily IPO. So obviously they're on CNBC, and I wasn't listening, but I saw, you know, the graphic on screen. I think the CEO was trying to sell them as like a tech play. I was like, oh, okay. Oh, or no, it was a data play. I was like, okay, you're a data play, or you make jeans. So one or the other. But let's move on here. It's 8:27. We got about 8 minutes before our guest and about 3 minutes before the opening. Imbalances come out for the NYSE. Going back to the ratings, there were a couple more on the list here this morning. Five Below was catching an upgrade from JP Morgan to overweight, and they gave it a $150 price target.
The $5 dollar store just continues to outperform, and here we are breaking out. We're talking about potential new all-time highs here in Five Below. It looks like it's going to challenge it here today. Incredible. We should come out, Joel. Let's just quit pre-market prep and go come out with the $10 dollar store, and we could retire on that. You know, it's like 6 minute abs. Remember that? It was like, what was that from that? What movie is that, Spencer? Remember 6 minute abs, 7 minute abs?
Yeah.
We'll come up with 5 minute abs.
Right. I don't know. I know what you're referring to, but I don't.
I can't
don't
remember what movie that was from. Anyways, dollar stores work, $5 stores work, maybe $10 stores will work. Anyways, I can't argue with the performance here. And you know what? I've been in a couple of those stores. You get some pretty good stuff for $5. They got like nice hats and that. It's actually, you know, ball caps. It's actually, you get some stuff for $5. The $5 dollar store.
Trading just off the highs of the pre-market session, 134.50, where that comes in. I can only give you one number. That's your all-time high, and I thought I saw 136 print here. Let me go to the monthlies, and you had an all-time high back in September at 136.13. So if you're holding out for more on the long side, there's your target for the all-time high, up $5. A little steep for me. I have no idea where to buy this thing on a pullback.
Also from ratings land here, Spencer, I see Lilly catching a downgrade at Guggenheim here today. LLY trading down slightly on it. A lot of odd lots, 21, 25, 90 bid here right now. Again, it seems like ratings and stuff don't influence big pharma as much as they do in other stocks, but we haven't seen a downgrade for Lilly for a while. So let's see, you know, can it, you know, get some momentum going and take out the low of the move 124.61, because this one is still in a clear uptrend. I think bulls are still in control as long as it's above 124.61. And this is another one I should never have sold for my long-term portfolio.
Trading down in the pre-market, not a lot of volume. I'll just stick with that number too, 124.61. A number ahead of that, 125.61 may come into play here. That is your 4-day low. And let's see here. If we have any closes in the same area. Yeah, we do have, if you get a rally up here to the 127 area, just be aware that 1, 2, 3, 4, 5 of your last 6 closes have surrounded 127. So major support 124.61. I'll call that 127 resistance for now.
We also
8:30 number just came out.
Yep. We also have, okay, so wait, I was sorry. I'm not looking at my news feed. The number was PPI month over month for March, 0.6% versus a 0.3% estimate. Year over year, 2.2% versus 1.9%. Core PPI. So it's just higher across the board.
Yeah, leaking just slightly. I mean, we dropped a half a point on this, so not leaking much at all. Let's go look at the imbalances. Citigroup stands out right now, 163,000 to sell in Citigroup. That is significant there if I'm just looking, and that's why you're seeing Citigroup sell off here right at 8:30. It was actually trading flat, and it's all of a sudden down 20 cents. If you're wondering if something just happened on Citi, it was the imbalance that just came out, and there's 163,000 to sell. It's the biggest Citi imbalance I've seen in a while. General Electric has a sell imbalance every single day, 369,000 to sell here again this morning. Got to think eventually it's going to take out $9. I'm looking in the book. It is thick, so it isn't going to be easy sledding for the shorts to take out 9. I can see 400,000 at 9, 20,000 at 901, 30,000 at 902, 65,000 at 905. I mean, it's just littered with stuff. Take out 9, it gets interesting. It starts to open up a little bit more, but that's going to be the battleground here, at least maybe for today, to see if General Electric can indeed take out that 9 handle and get an 8 on it. Wow, what other imbalances? Disney. Oh, yeah, we haven't talked Disney yet. 62,000 to buy here in Disney. House of Mouse is trading up. They got a big, Investors Day or something today, Mr. Israel, for the House of Mouse?
Something like that. Yeah. Here, let me look.
Yeah, there's something going on with Disney here today. I believe it is an Investors Day. I actually took it long overnight. I've already sold it, though, on the pre-market just because I knew that Investor Day was today. I don't know what they're supposed to be announcing, or what's hype, but it is today, their Investors Day. And often you see these stocks, trade up on those days ahead of those events. And we're seeing that again here this morning.
Yeah, and it means there could be headlines coming out. So you never know.
Yes. Dennis, was it something about Mary?
I think so.
That's what the chat.
Yeah, it was. So it was the scene, and he's going across, and he picks up a hitchhiker, and the hitchhiker's whole spiel was, you hear 7-minute abs. So he's like, I got this great business model. The hitchhiker's talking about the great business model, and he's like, what do you think of this? 6-minute abs, and he's like, okay, yeah, that makes sense. 7 minutes. You do it quicker than 6 minutes. And then Ben Stiller says, well, what if they come up with 5-minute abs? And he's like, you can't have 5-minute abs. He's like, you won't even break a sweat in 5 minutes. That doesn't work. So, anyways, I always get a kick out of that. Thinking about that when somebody's trying to one-up somebody and 6-minute abs, 5-minute abs, but you never even break a sweat in 5 minutes. So that would never work.
Palo Alto Networks.
Work, guys. Somebody come up with that. I think it would work.
Palo Alto Networks, second request here in the chat. Sleepy. I don't know what to say here. Look at this trading range from like 235 and change up to 250. And this range is held forever. And a brother here, this held since March 11th. You're kind of in the middle here. I guess the long-term trend is up. Last month you had a red candle, a little bit of a red candle this month. So I would just try and hold on until it took out the bottom of that trading range and then see if it could pop above 250. But it's really chop and slop here for really such a volatile stock. It's just taking a breather here. So those are the
kind of looks ready to go too, though. It looks like it's consolidation station where I think it eventually might resolve to the higher side, but hard to say. I mean, do you wait for it to break out? Breakouts are so hard to play too, just like Gil Morales says. It seems like you wait for the breakout and you get the breakout, then the breakout becomes a fake out and comes better down. Gil Morales has been saying for a while, we've had him on the show multiple times, he's saying actually, the best thing has been buying the stocks on weakness, the strong stocks on weakness, which me and Spinner talk about almost every day. I mentioned on the show, is a stock in an uptrend, and buying those on weakness seems to work, as opposed to buying a stock that's in an uptrend on strength. It seems like when you're paying up for it, and it seems like there's always another pullback coming. It's just not this raging bull market where everything just keeps ripping. It seems like it always gives you another chance. So it's almost better to buy the red candle than buy the green candle. All right, even on the strong stocks.
And on that note, let's go grab today's guest. Ryan Detrick is a great follow on Twitter at Ryan Detrick. He is CMT and the senior market strategist at LPL Financial. So we'll be right back in a moment here with Ryan. All right, welcome back, everyone. It's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick, joined now by Ryan Detrick, Senior Market Strategist at LPL Financial. You haven't even said anything yet in our chat. Is loving you. So, Ryan, welcome to the show.
Thank you, guys. I'm glad to be back. Appreciate the opportunity today.
I want to ask you about something I saw you tweeted yesterday regarding S&P 500 earnings growth. So the expectations for this quarter are not great. But you took that as a sign that it would be it's setting up a rebound in the second half of the year. So kind of walk us through your earnings expectations for this upcoming quarter and then through the rest of the year.
That's right, guys. So first things first, it is the first quarter. Historically speaking, you look at just GDP during the cycle, GDP has been the weakest during the first quarter. So weak economic data early in the year isn't a shock. So let's get that out there. But most people are expecting S&P 500 earnings in the first quarter to be negative for the first time in 7 quarters, down about 3 or 4%. You look at history, though, what happens? Our bar is set low. Normally, earnings come in anywhere from 3 to 5% higher. So our expectations here at LPL Research are for about a flat first quarter earnings. But the thing that we like about it, there are a lot of revisions, a lot of cuts, obviously, to earnings after the very scary fourth quarter and earlier this year with the weak economic data. The last time we saw cuts like this was actually the first quarter of 2016, a time again where the bar was set very, very low. The asteroid didn't hit the Earth. The economy continued to expand, as we've been talking about here. And the good news there is we see that playing out again. And we think there's a good chance by the second half of the year, earnings can really start to accelerate. And when all is said and done, we think 6 to 7% S&P 500 earnings growth for this year is very likely. And that's a pretty good number and better than what most people expect right now. Most analysts think earnings will be up about 3 to 4% for the year. We think that's a little low, and earnings come a little better than expected. And it's justifying, these potentially all-time highs that we're flirting with on stocks here.
And we know that analysts, I guess generally speaking, come in a little, they tend to underestimate when it comes to earnings growth. Considering the fact that we're almost back at all-time highs here and we've rebounded hard from the end of the year, the first quarter the performance wouldn't reflect a decline in earnings growth. So how do you sort of negotiate those two things right there?
Yeah, that's a great question there. I mean, we look at it like this. You said the first quarter, right? Best first quarter for the S&P since 1998. Well, we're coming off the worst fourth quarter since the financial crisis, worst December since the Great Depression. So it's almost like kind of some positives came in. I mean, so earnings are one thing, but, we just released kind of a playful weekly commentary, the Final Four. We listed policy as our number one driver for stocks the rest of this year. That's the Fed, right? What's the Fed told us? And just in minutes yesterday, they're on pause. Guys, you look back in history when the Fed was hawkish and then moved to pauses. You had 85 and 95. Now, those are really good years for the stock market. What's really important to note, though, the economy was much better the year before in 84 and 94. Then the Fed became more dovish on pause, and the economy was weaker, quote unquote, but stocks did better. What's that sound a lot like? Boy, that sure sounds a lot like 2019. We had a great economy last year, really solid earnings, low inflation. And this year, the economy is not going to be as strong, but sure enough, stocks are doing better. And it is part of the earnings can be better than expected. But the accommodative Fed pause, Fed punt that we've kind of had with interest rates here, we really think is another big driver for 2019.
I mean, isn't the market just more confident here, Ryan? You think about in December when we were selling off and everybody was scared, and obviously it was a significant sell-off. I was scared as well. But then the Fed comes out and defends the market. It tells you, like they went immediately where they started getting a lot more dovish, and it just kind of tells the market, hey, the Fed's got its back. And if the market starts to go into a significant sell-off, the Fed is going to defend the market. They say they're data dependent, but we know to a certain extent they're market dependent as well. And doesn't it make money managers more confident when they know the Fed's behind them?
Well, it should, right? And, one thing we like about that, though, you talk about market sentiment and things. So people were obviously shell-shocked late last year. But you look at that recent Bank of America Merrill Lynch fund survey of global fund managers, like $600 billion is what these guys manage. 2.5-year lows to equity in that recent survey that they had. It came out maybe 3 weeks ago. So that's just one sentiment indicator, I'm aware. But you look at it flows in and out. Yes, more money's been flowing into stocks and equity mutual funds here. Still, we really think there's still, it's a quote unquote money on the sidelines. We really do think there's a lot of money on the sidelines. And here's one more for you. Everyone's talking about the yield curve and when's the recession going to come. Last week we had new lows on initial claims this cycle. You do not have recessions right after initial claims at new lows in the cycle. We look back in history, it's more like over a year before an average recession even starts after new lows happen. So with jobs still hanging in there strong, look at the job print we had last week, over 200,000 jobs average the past 12 months. Again, you don't have recessions near term after job strength like that. So the economy's on firm footing, the Fed backstops there, the scary stuff that we had, government shutdown, the discussion, we even talked about China. Isn't that amazing? The discussions with China, which we think are inching closer to resolution, all those things, those scary things that happened late last year are out of the way. And that's really why S&P's up, 13, 14% for the year, in our opinion, with potentially some more gains. We've got a 3,000 target on the S&P. We stuck with that target at the start of the year, and a lot of people cut their estimates. And we still think that's quite likely for stocks to still have some fear the rest of this year.
We're on the line with Ryan Detrick, and he is a CMT, Senior Market Strategist at LPL Financial. I'm going to go a little bit broad here, Ryan, and I just got to ask you where you get all those wonderful statistics and information on Twitter and posting and these historical standards and stuff. I mean, are you just working 24/7, or do you? How do you do it? Where do you get all that amazing information?
I just make most of it up. No one checks me anyway.
Just like, all right, man, you're going to be a regular on this show. Hire this guy.
No, I guess I've always had a knack. I've always had a knack for it. What I found when I started using social media 10 years ago, you can talk about valuations and things like that, but if you don't back it up using historical data to kind of show, we've been here before and here's what's happening in the future, then it didn't matter, right? So I've kind of made a knack for that, and I found that that's what tends to resonate with people and resonates with me. As a market strategist, in a way, I'm a mouthpiece for a 55-person research team. I like to tell stories. I like to make things engaging. And I found that, using stats and things like that are kind of what helps, I guess, differentiates me from a lot of other market strategists. So that's kind of the way I've molded my career. But yeah, you're right. I love using stats. Here's one for you guys. This is year 3 of the presidential cycle. I'm sure you've had some guests talk about this. This year has never been down for stocks since World War II on a total return basis. Just things like that. The S&P was down 2 years in a row, only in recessions. Okay. We were down last year. We came into this year saying, hey, if we don't have a recession this year, the odds are slim you're going to be down 2 years in a row. And we didn't see a recession. And now we've had this bounce back. So those are just big picture things we like to use to talk and explain to our LPL advisors so they can talk to their clients to explain, we've been here before, right? Everything happens. Everything's happened before in history. If you go back in history far enough. What's the Winston Churchill quote? He likes to go, the further back in history you look, the further out into the future you can see. And I think there's a lot there. When you look at what happened in the past, you can kind of find some potential way to go to the future. But let's be honest, no one really knows the future. Bottom line for LPL, the economy is pretty strong. Fed's on pause. A lot of those concerns that we had late last year out of the way. So those are why stocks are doing quite well this year, and we can continue.
Ryan, I want to get a little more micro here. Are there specific sectors that you are more excited about in the next few weeks here as we get earnings?
Yeah, well, we don't necessarily talk about a few weeks, but I will say for the rest of the year, we like value over growth. Now, I get it. That trade has been very painful for a while, but value is historically undersold relative to growth. Also, we do think the economy is going to do better than a lot of people give it credit the second half of the year. So that comes back to that yield curve. We think the yield curve, yes, I know the short end just inverted, but it's steepened. We think the yield curve will start to steepen the second half of the year. That can help financials, which should help value. Also, probably our favorite area is emerging markets. We came into this year saying, hey, if we know the global recession, emerging markets could be a place to find some alpha. Emerging markets, as we speak, guys, about 10 days in a row. So it's had a really good run. A pullback could be deserved. But, there's 6 billion people in emerging markets, and there's a lot of potential there, good valuations, good fundamentals. So emerging markets, value, and we like growth as well. We like large. We like large cap over small caps. Late in the cycle, large caps, look back to 2006, 1998, 1999, large caps do better than small caps late in the cycle. So large caps, emerging markets, and value are 3 areas that we are definitely overweight for the remainder of 2019 in the models that we run for our advisors.
Ryan, I just wanted to expand on the emerging markets a little bit here too, because something that I've talked about on the show for a while is, you look at, the EEM, for instance, if you just want to look over the last 7 years, we've really gone nowhere. I mean, so you think about this, and in that same time period, the S&Ps over the course of the last 7 years have basically doubled. So, or even, more than that, it's up about 110%. So is there a catch-up trade here long-term? I mean, the emerging markets and, even a lot of other markets, not just the emerging markets, the European markets have underperformed. The U.S. markets have been the best place to be for so long. Is there eventually going to be a catch-up trade for the rest of the world?
Yeah, we think so. And we do think that catch-up trade will be led by emerging markets, not necessarily developed markets. But you mentioned emerging markets. I mean, it's a big play on the U.S. dollar, right? Sometimes it's as simple as if the dollar trends lower or just goes sideways, EM can outperform. If the dollar is strong, emerging markets are going to struggle. And we do anticipate a weaker U.S. dollar here with the trade deficits, and this is what the Fed has said. But you talk about EM just getting geeky and technical for a second. You guys have probably talked about this on the show before, but in October, emerging everything bottomed in October, and then in December, emerging markets did not break their early October lows. U.S. obviously did. China, everywhere else around the globe broke those early October lows in December. Emerging markets didn't. That to us was a small, subtle clue that there's relative strength happening under the surface with emerging markets. And yes, I know year to date EM has underperformed the United States, but it's also did really well in the fourth quarter relative to the United States, but can't always go up. So we think that was a subtle sign that it could be time for EM to start. And we do think that this cycle of emerging market outperformance absolutely could last a lot more than just a couple quarters. It could be several years. That's kind of what history does. For years, these things take turns. We think EM's maybe going to take the baton here for a while, and we definitely are a little overweight emerging markets in our models.
All right, something coming here from Rob Hood. He wants your predictions for the Cincinnati Bengals upcoming season.
Wow. My, oh my, I didn't expect that curveball. As a Cincinnati, as a homer, as a Bengals fan, we just always get such, I don't know. And you know what? I'm going to be optimistic, right? It's springtime. The economy's looking better. You look at it like this. That team was 4-1 before A.J. Green got hurt, before Tyler Eifert got hurt, before Mixon was kind of banged up. So when they had their whole team, they were good. And once everyone got hurt, I know what happened. The season fell apart. So let's be optimistic. But as an Ohio State guy, too, I'm hoping they draft.
Oh, you're done.
I know. I'm sorry, guys. I like Dwayne Haskins. I'll take him at QB.
Oh, man. All right. Didn't know you were an Ohio State guy. I think Joel just,
Joel's done with the interview.
My last time.
Yeah, that's okay. Ryan Detrick is a senior market strategist at LPL Financial. Great follow, like I mentioned, on Twitter at Ryan Detrick. Thanks for your time so much, Ryan, and we'll be in touch. Have a good one.
Thanks, guys. Appreciate the opportunity. Have a great week.
All right.
All right. Thanks, Ryan. That was fun. That was fun. Get to throw the old sports question at him. Like to mix things up.
That's right.
Yep.
Keep me honest.
All right. We're going to beat Ohio State this year. I just want you to know I'm guaranteeing a victory.
Which sport?
All right.
All right, guys. Well, I'll look forward to the next one. Let me know. All right. See you guys. Right. Bye-bye. Thanks.
Thank you. All right. Great guest there. I totally agree. Dennis, let's talk about the thorn in your side in your portfolio. Tesla.
Well, there's a few of them. Tesla would not be one that I would think is the thorn. I have a lot thornier stocks than Tesla in my portfolio, but yes, I am down a little bit in this one. Yes, it is the smallest position in my investment portfolio. It is it's actually about 10% of what I normally take now in a position. So just because I couldn't stomach it, because when I originally put it on, it was about a third, and then I sold half of it. Should have sold it all just to not have it, but I don't know. It's kind of for fun, pure speculation. You're owning Tesla, it's still spec play. I mean, I don't think of Tesla as a blue chip stock. It's still speculative. But you know what? Bad news here again today. Stock is down, but it's just not, this has been really bad news the last few days. I mean, think about, the gap down kind of came back on the weaker sales. Now, what's the news here today?
Well, yeah, the news here today is that their gigafactory that they have with Panasonic, they're freezing spending on that $4.5 billion gigafactory. Now, they did come out and try to spin it a little bit and say they are continuing to make new investments in the gigafactory one, but the reason for this spending halt is a demand uncertainty for electric vehicles, which you never want to see.
Oh, that sounds terrible. Stock's only down $8. I think it'd be down like 80 on that. I don't know. I mean, this stock is resilient, whether it's the short interest, it's the people that all want to hate on it that continue to not, defy. I would think it would be down a lot more on both of these headlines. The headline that came out there a week ago was not good either. I mean, what was that headline? It was declining sales too, wasn't it?
Deliveries.
Yeah, deliveries are down. I mean, this is declining sales, and now they're saying, the writing's on the wall here, actually, that I should be selling the stock. But, I just, for whatever reason, going to hold a little piece just for fun, and probably because my wife wants me to hold a little piece of it too. But, and happy wife, happy life. But, I mean, I'm somewhat, concerned here that, it's the trading action's okay, but the headlines continue to be bad. I mean, this hasn't had a positive headline in a long time. What are your thoughts? What do you think? What's Jason Raznick think?
I don't know. Is Raz around? We haven't had him on in a while.
He's
Is
not
he working today? No?
Yeah, I actually haven't heard his thoughts for a few months on this.
Is he still in it?
Or
did he sell to me?
No. He's not. He's not gonna sell. You'd have to kill him to sell his shares. But I don't know what his thoughts are. But I don't know about this one.
I love the story. It's still got the story, but every piece of fundamental data that's coming here in the last couple of months has not been good. And there's obviously some other stuff, revolving around Musk as well. The uncertainty around this story is incredible. So, but that being said, the stock has been fairly resilient in the wake of bad news here. So I guess, the trading action still says, hold on, and, starts to breach out and break down below that 240 area. Then it would maybe be time to go. Like if you're really drawing the line in the sand, the lows at 244 and back in, the beginning of 2018, and then we got down to 247 back in October when everything was low there. Those would be the line in the sand where you're probably, thinking, okay, the bears are finally taking control of this, but it's still holding on.
Buy the dippers have emerged this morning. You are $4 off your pre-market low.
They keep coming back in this thing.
Yep. Pre-market low, 263.20, traded at 67.5. So to me, that signals that if you do go into a decline here from this current price, you will find buyers, as you found buyers on the way down. And I think if you're a really cagey range trader, and you can take, because you look at the chart and it says, okay, there's a trading range, right? And you should buy the bottom of the trading range and sell the top of the range. When I look at the bottom of the range, I'm like, oh, I'm too scared. It's going to 200. And then when it's at 360, 370, you think it's going to 420. So tough stock to trade. I just think it's a little bit on the rebound today.
Wish I would have sold it all. I don't know. Maybe I will sell the rest of it. We'll see. It's small enough that I don't think about it anymore, which is a good thing. Jump over to where were we going to go? We cover all the ratings?
Yeah.
We only have 2 minutes here. Is there any other ratings?
One more. Curry, Dr. Pepper, downgraded Morgan Stanley, but not huge. Then
you had a little merger here. FRSH getting acquired. Who's buying that?
Oh, yeah, that actually reminded me of the Caesars headline. But FRSH, Papa Murphy's Holdings, is getting acquired this morning by MTY Food Group for a price of $6.45 a share. So that FRSH is off the board. And CZR,
What's the symbol on MTY Food Group, or is that private?
That's private.
Private. Okay, so fresh, going off the board at 645. It's 640. There's a billion shares on the bid, a billion shares on the offer, basically 640 to 641. So the Arabs have priced this already in, and they're giving it a nickel risk. And obviously, that's just the time value of money. There appears to be no risk this deal isn't going to get done.
And then a report from the New York Post that Caesars Entertainment, which this has been discussed for a few weeks now, is preparing to put itself up for sale as soon as this week. Tillman Fertitta and El Dorado Resorts are seen as the likeliest bidders.
I'm torn on this. I still own Caesars. I'm up actually significantly there because I almost got this right at the low. I mean, it was a couple of double bottom there in March, just above $8. I think I'm in at like $8.20. So I'm up about $1 in this right now. It's been a good trade for the last month. The reason I got in there was just because of, access. Because Uncle Carl's in there and he's going to push for a sale. So I figured, and it pulled back significantly from when we found Uncle Carl, and actually was lower than when we found out Uncle Carl was in. So I kind of, the little Uncle Carl put has me in this right now. This is in my long-term portfolio, but I'm in there just for Uncle Carl. If Uncle Carl rings the register, I'll ring the register. So we'll follow Uncle Carl a little bit on this. We're talking Carl Icahn. And, we'll see where it goes. Maybe you can get, this thing, maybe they can sell it. Maybe this thing can get $12 or $13, which would be sweet. I don't know if that's going to happen, but if it looks like it's, if it looks like there isn't a sale to be had, then, maybe I'm going to have to ring the register.
Have you looked at this Trade Web IPO at all, Dennis?
Moving.
Yeah. Wow.
GW. Straight up. This is how you do it, guys. This one's been straight up since the IPO 5 days ago. I think it was like 28, the pricing, opened 33, and it's been straight up ever since. Got up to $40.98 yesterday. It's up here again this morning. It's hot.
All right. Too high to chase, or what's
it's not enough. There's not enough data here, really. I don't like trading them on third, fourth day. I might day trade anything, but to make a call for a swing trade or a longer term investment, just not enough information here yet. I like the business model. Like I like, they're bringing transparency, obviously, to the bond market, which is needed. They do a lot of good things. So, I mean, this is a good business. Just a matter of valuation.
Wait, Dennis, what do
never really sat to crunch it.
Dennis, what do they do?
Okay, well, TradeWeb, it's trading, but it's bond trading for the most part. So they've got a whole bunch of different businesses, though, as well. You can go to the site if you want and just read it. It's leading fixed income, derivatives, and ETF electronic trading platform for institutional wholesale and retail investors and dealers. They're basically bringing a trading market to fixed income. Because you think about, bonds, and you call your broker, and then they give you a price, and you go, trying to bring more transparency there, which is needed. So I'm all about what TradeWeb is doing. I love it. And, maybe eventually we use stuff like this, and eventually we're going to be able to trade bonds, just like, we trade stocks. So I think TradeWeb is needed. I think what they're doing is excellent. It's just a matter of sitting down and crunching numbers. Are they paying too much for it? That's the question. So it's a valuation issue for me, but I'm a believer in the business.
Just want to cover one more here. Boeing, Dennis, look at this. Back down to that area, 4 straight days in a row. 362.92 was the low yesterday. Low of the move here, 361.53. I mean, it's got a couple downgrades, but man, oh man, I guess support is support until it's taken out.
Yeah, and you're right at support here right now. So are they going to continue to defend it? Maybe it gets a positive headline and rips out of here again. I mean, if you're trying to buy it here, I can't argue with you. Support is support until it's broken. Starts taking out 360, goes 359 on you, then it could be problems. But the reason that I'm not, swing trading this or, they're doing anything more than an intraday trade is there's a new headline every other day. The headline risk in here is incredible. Headline could come out, the thing could go down 20 points. Headline could come out, the thing could go up 20 points. So it's kind of almost like a coin flip here, but you're buying technically off support. Support is support until it's broken.
All right. And on that
quick
note,
look at imbalances just before we let you go. Give you one more look here. HPQ 93,000 a buy. Bristol Myers 89,000 a buy. Those are significant. Conagra, I know they were talking in the chat. Some of the food stocks have been moving. There was some headlines from CAG again last night. It had a good day yesterday on a headline. 77,000 a buy here this morning. So it looks like CAG is going to challenge the 30 area. I got to just go look at the book because I got to think there's some size there at 30 just while I'm bringing it up here. CAG, looking at the New York open book, 30. 29.90, 26,000 shares, and then 30 only 12,000 shares. So about 40,000 shares between 29.90 and 30. So that could potentially put a lid on it. We'll have to see if that grows at $30. Disney still, investors day to day, 58,000 to buy. General Electric, 487,000 to sell. Some institution just dumps this every single morning. I still think eventually it's going to take out the $9, although it's got some work to do because we talked about those big buyers in the book. CVS, 70,000 to buy. Stock is up a little bit here. It's been sleepy for a while. That's an interesting one. Quick technical thoughts, CVS, Joel, and then we'll have to end the show.
Okay. All right. CVS here. I mean, it found support on that Walgreens day, right? When it went down 52. So if you're holding in this for a swing trade, that's your bogey, 51.77. And I think that was also the low, 51.93. So there's your rock solid support. Institutions may defend if it gets back through there. And sleepy ranges the last couple days, I would say you need to clear 54.50. Oh man, there's just a lock on this thing at 54.50. I see a 54.43 high. After that, the high of the rebound, 56.17. So got to get through that 54.50 for rally to continue in CVS.
All right. On tomorrow's show, we'll be joined by Kathy Donnelly. She is a private proprietary equity trader, and she's co-author of The Life Cycle Trade. she would join us on tomorrow's show at 8:35. But if you missed any part of today's show, our podcast is available on iTunes, SoundCloud, Stitcher, TuneIn, and Google Podcasts, or just rewatch our show on youtube.com/Benzinga TV. Thank you to today's guest, Ryan Detrick. Thanks to all of you in our chat. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. Everyone, have a good rest of your day. We'll see you on Friday.